Good morning, everyone, and welcome to another edition of Bleeding Crypto's 15-minute market update for BTC. Let me start off with my disclaimer. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all. This is for entertainment purposes only. All right, guys. Hope you're having a good day, morning or afternoon, depending on where you are in the world. Today is Tuesday, July 2nd, 5:54 a.m. local time. I just finished having my morning brief video with my team. Give you a quick summary of it, for lack of a better word, is going to be that things are starting to shift a little bit. I was looking for a breakdown, so I posted this yesterday. As you guys saw in the Telegram, very similar patterns. Remember, I'm an analyst. What does an analyst do? An analyst identifies patterns. I'm a day trader. So I have to instruct my team on a daily basis what those moves are for that particular day, and things do change. On the hourly time frame, guys, remember, it's very different when you're a swing trader. When you're a swing trader, you're watching at one time frame. Like the larger time frame, like the daily and the weekly, they don't have a lot of volatility. You see a lot more green candles in a row, and you see a lot more red candles in a row. As a day trader, it flips from 1 hour to the next. You can have 3 or 4 hours where it's going up, and then 5 hours where it's going down, and then 4 hours where it's going up. It's very different. A lot of volatility. Which is why you see a lot of traders say, "Oh, fuck that! I'm not day trading." It's hard to read. It's not easy to read. Most traders will stick to a higher time frame for that. I like it. I can identify to it, and I can adapt. That's the most important part. If you can adapt to the environment of a 5, 15, and hourly time frame, then day trading is for you. If not, stay away. You don't need to. But if you want to become a day trader and you want to give it a chance, try it. Try it with $5. $5 is not going to hurt you. It shouldn't hurt you. If it does, then you're in the wrong business if $5 is going to hurt you. And see what happens. See if you can turn those 5 into 10. See if you can turn those 10 into 20. Those 20 into 40, so forth and so on. So things do change quickly, and they do, and you have to learn how to pivot. So far here, what do we have? We've got 3 lower highs. And remember what I showed you yesterday. In reverse, this is an extremely, extremely bullish pattern. When we have 3 lower highs, we usually see a push up. 3 lower highs, we usually see a push up. No different in reverse. We got that push down, but here's the thing, guys. We have an M pattern. An M pattern, what I look for is I look for a break of this neckline. This is a neckline, and I like using the candle bodies. Even though this is a little lower, I like using the candle bodies. We did break it. However, we regained it immediately. That's bullish. That's bullish. So even though we have a bearish market structure, even though we have a very similar market structure to where we broke down here, look, we rode support on this purple line. We broke it. We back tested from the underside, and we dropped. We rode support on the purple line. We have the same triple top. We lost it. We back tested from the underside, and we dropped. Nothing different. The only one, this one just dropped a little bit more, but the drop was there. So Look what happens after that drop. Look what happened here. We pushed up, then we consolidated, then we had a next push up. Well, what's happening here? What's happening here? Do you see how quickly things can change? I want to see a confirmation of this breakdown, and I'm not getting it as of right now. I'm not getting the neckline back test break for further downside, better said. We did get that drop. Yes, it's not as deep as this one here, but now we're starting to recover, and we recover the neckline. I got to shift. I got to shift my bias for the moment that I'm in right now. And that's the problem that most traders that want to become day traders cannot do. If they see a bearish bias like this, they say it has to. There's no way, and they can't adapt to this. I have to look at the clues. My clue right now, my number one clue is the regain of the neckline. All the EMAs were lining up. They were curling. They crossed. They bear crossed. But the bull stepped in. The bull stepped in so far. Doesn't mean they're going to follow through, but they are stepping in. So I got to adjust for that. Now, I also have to recognize, now that we have, these are my EMAs. Look at the 300 EMA. 300 EMA, support. We lost it, and look what we're doing. We're trying to regain it, but we haven't yet. So that still lends that bear bias, because even though it may look like it wants to come back, it needs to clear through certain hurdles and confirm certain confirmations for me to switch completely into a bull. Can I scalp it? Yeah, sure I can scalp it. But it doesn't mean that it's something that I want to fully commit to just yet, until the market proves it to me. What did we do? We came right down to the 50 EMA. What do we do on the 50 EMA? We put a W. A double bottom. That's bullish. What is the rules of this W? We should go to the top of the left side of the W, which means I'm looking for a move to here. I'm looking for a move to there. Once I see that move there, I'm expecting a rejection down to a 382, and then a move to the upside. So this is what I'd be looking for right now. Let me kill this. So let's just say we got up to right there. I'd be looking for something like this. Here, and right there. But I should have done, you know what? I should have done it from here. Sorry. Here, and here. Right there. I'm looking for something like that, because of what we got overnight. While I was sleeping, things changed. We did get that drop, but then we found support on the 50 EMA, which is, again, do you notice when I'm looking for supports, I'm always talking about the 50 and the 100 EMA? They matter. Go to the daily time frame. Look, they matter. I'll have to adjust it here. Hold on. Every day it moves. There we go. That's the 100 EMA on the daily time frame. I put this on here so when I go to the lower time frames, I can see where it's located. Look how it matters. We went right up to it and we rejected. When we were above it, we went right to it and we found support. We lost it. We back tested. Then we lost it again. So we back tested that bear break, and look at the drop. These things matter if you know what to look for. The bear flag we had on the daily, guess what? Got invalidated. It's no longer a bear flag. Momentum is starting to pick up. MACD is starting to look really good. Things are shifting. We went from a bear, now it's starting to shift to a more neutral to bullish bias. You got bear, neutral to bullish, then you have bullish. We're transitioning right now. Is it confirmed? No, it's not confirmed. When will it be confirmed? When we get above the daily 50 EMA, it's confirmed a reversal. At that point, I close any short positions I have. I flip those funds into a long, and I ride it. That's the life of a day trader. That's the type of life that a lot of people don't want to have. They want to be able to play one direction and leave it open for weeks or months. That's what they feel comfortable with. Not me. I am flipping from bear to bull depending on what the data shows me on the smaller time frames. Bull, bear, neutral, bear, neutral. Could become a bull. You see that? Look, if you can adapt to this environment, again, not for you. You want to learn how to identify this? That's what my Discord is for. My Discord is a learning Discord. It's $125 a month. Very small price to pay to understand how the market, and there's a lot that I explain, a lot that I go in detail, a lot of the stuff that we talk about on a daily basis, that these patterns repeat themselves. I teach you that. I ingrain that so you have that muscle memory. This morning live, took a position, We're already in a position. The moment we started the video, I woke up. First thing I do is grab my coffee, turn on my video, set the invitation for my premium. As soon as they go in, we start talking about it. As we're talking about it, position presented itself. We got in. I've got a gentleman in my who got a guest pass who showed me some love on Twitter, and I gave him a 2-week guest pass. I'm sure he's listening to this right now. He listened to my morning brief. He was in it. Oh no, he wasn't in it live, but he'll be able to listen to it. He'll know. That's why I gave him That's why I gave him premium pass. Once you're in it, and there's no commitment, guys. I don't do it for like you can do it month to month. Because once you're in and you're making money, why would you want to leave? It doesn't make any sense. So I have no problem giving somebody a premium who shows me love as a reward and let him see for himself. It's a no-brainer. It's a no-brainer. You're going to pay $125, but you're going to make 3-4 times that amount? Fuck yeah. But anyway, in any case, for today, what I'm looking for is this. I'm looking for a move here, like I mentioned here, back into here, if we're going to see continuation. You have to understand that this is a continuation pattern. The market doesn't have to do what I want it to do, but I have to observe what it potentially may do. Now, this is the bull case. What's the bear case? Well, the bear case to me would be, let me go back to the hourly time frame. Couple of things for the bear case. Because we got this double bottom here, good chance we'll make it up to here. Okay, so that's one. But it doesn't have to bounce here. It can easily roll over, get underneath the 50, back test the bear break, and continue downward. That's what I'd be looking for. I'd be looking for the invalidation of this. This can meet it halfway, but not follow through. Or it may not even make it past the 300 EMA as you're seeing right now. As you're seeing right now, it's fighting, trying to get. We may just roll over and go to the next EMA, which is the 200 EMA on the hourly time frame. Then roll over to the 200 MA, simple moving average, on the hourly time frame. Very possible. Very possible. I don't know, but what I do know is that I need to be prepared for both scenarios, and I need to have a plan for both scenarios, which I do now. I have a plan for both. So that's all I can do for you guys is show you the path. Again, I went a lot more in depth with my team on every time frame, but that's what they pay me for. You guys don't. So it's just a quick summary. For today, we're looking for this, or like I mentioned, the invalidation. I will update you guys as things progress or digress. And is that a word, digress? I don't know. It seems right. Oh, well. We'll see which one of the two. I'm sure there's going to be plenty of language majors that are going to be telling me, no, BC, that is not a word. You just made it up. Which is fine. I have no problem with that. But let's look out for this. Allow the market to tell us, all right? Rather than us trying to hope or wish or get a gut feeling, let the data tell us. Let the data confirm. So let's see how this plays out, or do we continue down into here? This will be the next area of support that I'll be looking at. Why? Because that's the previous area. Actually, no, I'm sorry. This would be the previous area of resistance here. So we would have some structure. So let me put this here while I have you guys live, and I'm going to use these candle bodies, and I'm going to put this to green right there. So that would be the next area. If we continue to go down, would be the next area that I want to see. And let's do this here, guys. Let's just do a measured move here on what this was, so that we can see if patterns repeat themselves. We went up to the 0.50, meaning that when we dropped here, we put this low, we put this lower high. Well, it's kind of a double top, not really a lower high. We then dropped here. So on this drop, see this move that we had up here? It wasn't higher than this one here. So we put a lower high here based on this high here. It was lower, it was high, but lower than this one. So I took the bottom of here. See this little blue dot here and blue dot here? The low to the high. And then this move measured to 0.50. So I'm going to do the same thing. Now that we have a lower high to this low here, I'm going to take this off, guys, just to not crowd it so much. See that low right there? Now we go up to this low here. Up to this high, excuse me. With lower high. And then I'm going to do this. I'm going to just move it over. And we actually went above it. We actually went above. Normally, I don't use this. I use this. Let me show you. Normally, I use the short reload zone, the continuation, the lower high rule. But we didn't get that high. So I wanted to see if the pattern would repeat itself. So I kept it on here. Guess what? This one looks like it did go up, but there's no real pattern. Yeah, we went right up into the continuation, into the lower high rule. Lower high rule is 0.618, 706, and 786. But there's no real pattern here. Before this little push up here, we had a distinctive pattern. Does that matter? It does to me. I'm a patterns guy, so I try to recognize it. But this doesn't shift anything. Like doing this doesn't say, okay, it has to go down or it has to go up. It's just a measuring metric that I like to use to identify moves, because often they like to repeat themselves. They get very close to it. And that helps me just to kind of put a mindset to it. And what that does is it helps you to not have a bias. Because very often, think about it, guys, be honest with yourselves. Very often you're either one or the other. You're either a bull or you're a bear. Very seldom are you an analyst, where you don't care if it's a bull or a bear. You just want to recognize a direction. It takes a while to train your brain to do that. So I like the math to show it to me. That's what I'm waiting for here. I'm waiting for that confirmation here. Do we drop or do we continue? If we do drop, we did put a lower high here. Do we drop to here? Most likely, because this was resistance here. You can see here, even back here. Look, we broke above it. We back tested that. We dropped it and we back tested it again. We regained it. We back tested. I mean, right on that line. Look at this drop here. Look at where it stopped. You talk about a disciplined move. You can't get any more disciplined than that. Look at this. Then we pushed above it here on number 2. Look at where the candle body's closed. Look at the next candle body. How do you refute something like this? How do you look at a line like this and say, oh, it doesn't matter? How does it not matter when it's absolutely perfect? You couldn't get a better line than that. So those kind of things, guys, matter when you're looking at a market and you're looking for a target to the downside. Same like when we're looking for a target to the upside or a resistance area. Hopefully that helps, guys. A little background on that. I know I try to tell you guys that I'm not going to do educational, but again, it's very tough for me because I want you guys to understand what I'm about. I'm trying to get you guys to come into my Discord. That's why I'm doing these here. I'm not doing this for the goodness of my heart. I'm doing this because there is a capital gain. I'm a businessman. I want you guys to come here and learn if you want to learn. If you don't want to learn, do not sign up. There's no point in it. But I want you to know that I want to prove to you that I know what I'm talking about. That's why I do these free videos. You guys have a wonderful day, and tomorrow we'll see how things played out. All right, guys.